Dear students and working accountants, welcome to my Expert Tally Prime YouTube channel. My name is Babu Rao from Hyderabad. So in this video, we are going to learn, we are going to discuss about this interest calculation part 3. In the first two parts, we calculated simple interest, one for loan given and another for debtors. In this video, we are going to discuss about the compound interest. First, compound interest on loan. So the last one, we discussed a loan we gave them to others. Now this time we take up loan given to others, or we will also take loan. That also we will discuss. And both the cases, we calculate compound interest, but the parameters or configuration will be simple parameters, but compound interest. In the last two videos, simple parameters and simple interest. Now we will discuss about the compound interest with all the simple parameters. Okay, so I am sharing the screen. And one more thing, before entering into the topic, one request to you. Many students just they are watching the videos and going off, they are not subscribing. So I request you, everyone who are visiting for the first time or who are already visiting without subscribing, everyone, please subscribe to the channel if you have not already subscribed, and then click bell icon next to the subscribe button and select all, so that you will get notification for all the videos I upload in my channel. And the another most important thing is, see, everyone, please watch every video till the end. Don't skip the video. If you skip the video, you will understand the subject, you will know the subject up to that point only. The remaining part you cannot understand. It will be like half knowledge. It's a waste of time also. So please watch every video till the end. See one thing I'll tell you. In the college, when you are attending the college, at least we will sit in the college at least 2 to 3 hours. That is for a academic qualification only. Okay, but here now we are learning professional tally prime course. We are professional tally prime course. You are watching. For this also we have to spend time. So not like the college, at least less than an hour, 40 minutes or 50 minutes maximum, less than an hour you have to spend and watch the total video. And if the after watching, if you like the video, if the video is good, please like the video, click the like button, so that the YouTube people, they will share this video to many people, and many people will have the chance to learn this topic. Now we will enter into the topic. So I am sharing the screen. See here, in the last example, in the last videos, what we did is they have taken, say, loan given to Ajay. For that, we have calculated simple interest with simple configuration. And then we are selling goods to a person, Mohan Mahesh traders. We sold goods, so he is a debtor. For him, on this debtor's balance, we calculated interest, simple interest only with simple configuration. Now we are going to learn again in the case of loans, and in the case of loan, we have given in the last example. In this example, we are giving a loan and we take a loan also. So if you give, how you will calculate? If you take a loan, how you will calculate the compound interest? But the parameters settings will be simple only. With simple parameters or simple configuration, simple settings. So how to calculate compound interest, that we are going to learn in this video about the loans. In the next video, for the debtor as well as creditor. Okay, this we will do. So here, in this case, I will tell you an example saying, sorry. So in this one, in the last video, this is simple interest means, so the difference between simple interest and compound interest. Simple interest means whatever the period may be, for the total period, we will calculate interest at a particular percentage totally for the whole period on the same principal amount. For example, 80,000 is the principal. So for 80,000, if it is 2% into 2%, we calculate 1,600. This 2% only on the same 80,000, we calculate for the whole, it may be 2 months or 3 months or 6 months, on the same principal amount, we calculate. That means 1,600 rupees every month. This is called simple interest. In the case of compound interest means, after, see, compounding interest means, So this compounding interest means principal plus the interest also will be added to the principal, and the total on the total amount we will calculate interest afterwards. Again after that's why again after the period we add the interest to the principal. That is how when you will calculate means, so there will be some period, that is the this is called compounding interest, because principal and there is the interest is added to the principal, and total on the total amount will become the principal. Then you will again calculate the interest. That is why it is called compounding every time. So compounding interest or compound interest. So this compound interest will be calculated depending on the agreement. It may be calculated every month, it may be quarterly, whatever it may be. So that is called the compounding period. The compounding period may be monthly or quarterly or half yearly. Generally, it will be monthly or quarterly. So monthly compounding or half yearly compounding. In such case, every month we will calculate the interest, and that interest will be transferred to the account, because here in the case of simple interest, at the end of the period, after 3 months if he is paying, so then only we will calculate the interest, simple interest, and transfer the amount to the account. But here this interest is to be added to the principal. That is why if it is monthly compounding, so every month you will calculate the interest and you will transfer the interest to the account. You will transfer the interest into the account. In such case, then the some interest will be added to the principal, and in the next period means next month or next quarter, whatever it may be. So if it is quarterly, after 1 quarter we calculate the interest and transfer the interest. Monthly compounding means every month you calculate the interest and transfer to the account ledger. Then the interest will be added to the principal, and for the next period means next month or next quarter, that will be that is in principal plus interest, that will be the principal for the next period. And again in the next period, on that amount you will calculate at the same percentage you calculate for that period. Again, and after that period, that is month or quarter, that interest will be transferred. Every time we will transfer the interest to the account. See here, for example, so 50,000 rupees is the principal. The rate of interest is 10%. So 50,000 into 10%, it will be 5,000 rupees interest. If it is monthly compounding, for the first month, it is 5,000. If it is quarterly means, for the first quarter, it is quarter means 1 day to 3 months. And first quarter, 5,000. Now it is month. So first month it is 5,000. So this will be added back to the principal. Principal is 50,000. So this is first month. Second month, 55. Principal plus interest. Total will be 55. Will be the principal for the next month. Again, next month we will calculate 10%. 10%. It will be 5,500. It will be added to the principal 55,000. Principal means interest plus principal. So 60,500 rupees. In the third month, 60,500 rupees, including the principal and interest. It is the principal for the third month. And then for the third month also, we calculate the interest at 10%. It will be 60,050. So principal will be 60,500. Total amount will be 66,550. Again, next month also is not paid. Next month also calculate. Next month you calculate on the 66,550 into 10%. The interest will be 6,665. Like that, we will calculate. If he is paying, so every month you are transferring to the account and calculate the interest. That interest will be transferred. The total balance will be, if it is paid, we give the loan, so we have to receive the loan. Then with interest is receivable as well as principal. Total amount we will receive after the 3 months, whatever it may be, 3 months or 4 months. When he is paying, up to that we calculate every month compound interest, and that amount we will receive. Suppose if you take the loan, we have to pay interest as well as the amount also. So every month, same way, we calculate the interest and transfer to the account ledger, and the total will become the principal for the next month. Same thing will be then, but the difference is when you take the when you give the loan, so we write as we are giving loan to others. So loan to so and so, and he is a debtor to us, he has to pay to us. Then in such a case, the interest is receivable, and interest is receivable by us. That what, and also for transferring the ledger, for transferring the interest to the ledger, we use, say, debit note. We use when it is receivable. Interest is receivable. If you give the loan, interest is receivable. Then we use the debit note. When you take the loan, we have to pay the interest. In such a case, we have to transfer that with the help of credit note, because amount is a creditor to us. We have to pay the interest. So his interest is to be credited to him. So credit note we use, and the interest is called interest payable. That will be transferred. That's all. So that we are giving the loan, and interest is receivable, and we use the debit note to transfer. In case the loan is taken by us, we take the loan, then is called the interest from so and so person, from some person, and then the interest is payable by us, and we use the note, we use the credit note to transfer that, and at the end we will pay the balance. So interest is payable, we use the credit note, and with the interest including as principal plus all the interest, total amount outstanding balance we will pay after the particular period. So that is the difference. So first of all, we will take up an example. Say here previously already, see here in these two examples, one is loan and one other is debtor. But now we will take up loan that is given only, but here given and received we will take up. Say for example, here we have given loan to Ajay, and we received with interest 10,000 loan plus 600 interest, simple interest. So from April to July, totally it is simple interest. So 600, total 10,600 we received. This is the next one, that is debtor. So we have given loan to him, we got back with interest after the 3 months. It is a simple interest. But now see, July over. Okay, again 1st July completed. Suppose the 1st July or 1st September, 1st July or 1st September, for we have make entries in the ledger in up to 1st September. For example, on 1st September, we have given again loan to him. But this now we are going to learn compounding interest, how to calculate the compounding interest. And here compounding interest we have to calculate. So we are giving loan to Ajay again. Ajay, no, not Ajay. We are giving loan to Ajay. We are taking, now we take up Vijay, giving loan to Vijay. You will take up our from, okay. We are giving loan to Ajay again. So on 1st September, 1st September or 1st October, whatever it may be. 1st September we completed old loan. 1st July we completed again the same 1st July or 1st September we will take, no problem. So watches we are going. So here on 1st September, see already it is there. On 1st September we are giving loan to Ajay. Again we are giving loan. So we are giving loan means we have to make the payment. Payment on 1st September we are making loan, giving loan to Ajay. Loan to Ajay. So loan to Ajay we are giving. This time we are giving. So his balance is nil. So now we are giving 20,000 to him. Okay. When you start this what you call calculation of interest, so this is created. So go to Alt K, alteration. This is the company we created, and then after completing that, in the F11 features we have to enable interest calculation. Yes. So this is for anyone, whether loans or debtors, creditors, this is required. The interest calculation is to be enabled, and these things are this is necessary for the goods purchase and sale of goods, that is debtors and creditors. That's already done. So it is activated. But this is to be activated after that accept. Okay. Now we are going to the ledger. We are going to watch transactions. So 1st September, we are giving this to the same person. We are giving loan to Ajay. This time we are giving 20,000. So when you are when you are compounding interest, you are calculating. When you are transferring the interest to the ledger, then you have to give the option. It is to be treated as compound interest. Then only that will be added to the principal, and that will be the principal. That will be the principal for next period. That when the time of transfer, up to that everything is same. So cash, we are giving cash. So here what we will do here, a loan given on rent. For interest. Loan given for interest. That is the narration. Okay, we completed. And now how you will see the interest calculation. So in the previously we said what we can do. So we have to go out. So go to the gateway of tally, then display more reports, then statement of accounts, interest calculation, Then now interest we have to receive now because we gave loan. So go to loans, ledger, loan to Ajay you can take, or you can go to interest receivable. So here only one details will be shown here because we are giving the date is different. See here, first to that I will give later. Okay, here the date 1st September we have given. So the old date we have given April to September. That's why it is taking. That's why no interest is shown. So if you give 1st September to some other date, that is next every month, quarterly, monthly compound means 1st September to 1st October. If you take for that month, it will calculate interest. So this we are do. The same thing we can do easily without coming out and going to the gateway of tally. Here itself, after we completed the voucher, after completing the voucher, what we can do, we can go is use the go to option. In the go to option, just you can type here interest, interest you calculate. Interest page will come here. Ledger interest calculation. There itself, gateway of tally, display more reports, statement of accounts. Then we will go to interest calculation. Here directly we are going to interest calculation. So interest calculation are going. So we select the ledger. All the ledgers will display. Now we require the loan to Vijay. We given loan to Vijay. So that we have taken. And here, how you will calculate interest? Interest is to be calculated from 1st September to 1st October. So if you take F2, 1st September to 1st October. 1st October. See here. So 1st September means in the settings, the configuration settings. See here, first in the beginning, I will tell you. In the configuration setting, we have given the simple configuration settings when you are creating the ledger. So here, come down here. See, activate interest calculation. So yes, in this case, simple interest parameters are simple. These two are giving no. So don't add the first transaction date and don't deduct the last transaction road. 1st September, don't deduct. Take that. First September we have given. 1st September, don't add it, don't deduct it. That's why we are giving loan. And this time we are taking 5% per month, calendar month. And see here, debit balance only we can take, or we can take all balances also. That will show you. So debit balances, because we are giving loan, so his account is a debit balance. So debit balance you can take. So like this and accept. Okay, this we did. But now, instead of that, here itself, after completing the voucher, here itself you can do. So with the help of go to, if you print T5 here, INT interest, so ledger interest calculation, Vijay. So actually you have taken directly, we came here, simple work, and we have to calculate the date. Say from, what is the date? 1st September to 1st October. So here, 1st September to 1st October, calculating from 1st September and 5% for 30 days up to 1st October. So this is the interest 1,000. If it is 2%, it is 5%. 20,000 into 5% is 1,000. So easy date, even if you are giving, the loan is given on 1st September up to 1st October. Even if we take 1st April to 1st October, if you give the period 1st April to 1st October, but it will calculate interest for the period only when the loan is given September. So even if you give the loan, the date on 1st April, it will not calculate because there is no due. It is amount is due. The loan is given by us to the person Ajay on 1st September only. That is why even if you give the total from 1st April, it will calculate here only. It will calculate up to here. So 1st October. So up to 1st October, it is calculated. Okay, interest is calculated. After that, what you have to do? We have to transfer these to the ledger account loan to Ajay. In the ledger, we have to transfer. Generally, what we will do? We will go back. We will go to gateway of tally and we will take the transfer. For transfer, we can transfer the amount to the ledger through F7 journal also we can transfer. In that case, here the interest amount, everything you have to manually, you have to type the amount, 1,000 rupees, and that will not be added to the compounding. So only just you can make the transfer, that's all. But if you want to transfer this with automatically, it will be shown. The interest amount will be shown in the voucher. In the case of journal, we have to type 1,000. But in the case of debit note, that is, we are give loan, so we have to receive the interest. So we use the, because his account is to be debit balance. The interest is also to be debited. That is why So debit note we will use. If we use the debit note, automatically the interest amount will be shown in that. Automatically we will get the interest we need that type. Automatically the interest amount will come. And also for the next period, this amount, interest amount will be added to the principal so that this interest will be treated as compounding interest. So that settings we can do in debit note only, but ledgers, I mean, is journal we cannot make. So like this we get. So instead of going back from here itself, we can do what you do now. We have to transfer to the ledger through debit note. So go to this one. This in the last video. Okay, that's later on. Later on. Okay. First of all, for transferring this through the for transferring through debit note, in the debit note we have to make a setting. We have to make a setting. So that is, we have to create a class interest receivable, and you have to make a class in the debit note. And because if you do like that, then the amount will be automatically calculated. So what you do in the debit note voucher, we have to make alteration. So go to alter master. Alter master, we will go to voucher types. So which voucher you want? Debit note. Go to the debit note. See here, already for the last example, last loan, we have already created. See, in the debit note, I think we have to receive that. For debit note, his account is to be debited and that interest will be received by us. So interest receivable. So this is calculated and it will ask you, use this class created. This is interest receivable class. Use this class for interest calculation only, interest accounting only we have calculated. So yes, and this, the second one is in the case of simple interest. So amounts to be treated, amount means interest, to be treated as compound interest, we gave no, because there it was only simple interest. If we give no, it will be simple interest. Now we are calculating compound interest. So this interest is to be treated as compound means it is to be added back to the principal for next month. Both principal and interest should be the principal. So we have to give yes. So accepted. Now we have to make the come back, and here itself we have to even then see here we are here. Alter master, we have this one debit note, we have completed that. So this is accepted. This is after this, after completing this, see, after creating a class, so made yes, and then accepted. Now, okay. Here itself we can do what you can do is go to, and you have to make the entry now. Entry means voucher. So create voucher. So go to create voucher, and now when the interest is calculated from 1st October to 1st September to 1st October. So the end of the here we can have to take the what is the voucher? We're making the entry voucher. Alt F5 is the debit note. So in this case, it will show you the class of the. If you are not applicable means it will be a normal debit note for the return of goods. Debit note means purchase returns. Now it is for interest calculation. So take that interest receivable. That class will be shown. This debit note is for interest receivable, and the date will be 1st October. 1st October. Then come down. So what is the personal account is loan to Ajay. Loan to Ajay. And in this case, we'll calculate this one and then accept, and then this personal accept. So 1,000 rupees advance, interest, automatically it is taking and it is added to that. And then here second one is what is this? Interest. We have given loan, we have to receive that. That is why this is the interest receivable. We have to create interest receivable. See here how we will, sorry. You see here, this interest receivable is calculated, is created as interest receivable under indirect income. Okay. For this, no interest is calculated on the interest. Okay. So 1,000 rupees. So being interest received for the month of September 1st to October 1st means for the whole month of September. Being interest received, interest receivable, not receiving, receivable transferred, interest receivable for September. So with this, we have it. Okay. Now, see here, go escape. See here, came to the interest calculation page. So here itself, we need to go back. So here, this interest up to 1st October, it is transferred. When it's transferred, it will not show here. Even if you calculate now again from 1st September to 1st October, it will not show interest because it's calculated and transferred. If you don't transfer, if you calculate, the amount will be here only. And then if you calculate 1st September to 1st November, total interest will be calculated. 1st September to 1st December, the total period of interest will be calculated. But here, it's already transferred is calculated. But now, what is the interest you have? See, you need not come back here. See here, we transferred, we created the voucher, and through the debit note to the debit note, we have completed the first up to 1st October, September to October. 1st October we completed. Here itself, directly we can give the next month date, automatically the interest will be calculated. But we need not go back and see the interest. Just I am just showing you as example. So here if you come, now 1st October completed. Now you take from 1st April, no problem. 1st April to next month means 1st November. 1st April to 1st November, or 1st September to 1st November, or 1st October to 1st November. All are same. So whatever you take, the interest will be calculated from September to October over. From 1st October to 1st November, it will be calculated. Even if you take 1st April, see here. Even if you take from 1st April, it will be calculated after the last period. That is 1st September to 1st October, we calculated. Now, calculated and transferred. So it is telling from 1st October means 2nd October, it will calculate. First is over. From 2nd October to 1st November. Same, see here, 1050. Here you see first one is interest is 20,000 plus 1,000 rupees interest. So total amount principal will be 21,000. So 21,000 into 5% will be, see, 1,050 is the interest. 1,050 is the interest for this period. 1,050 is the interest. And now we can go and make the transfers. Okay. So here we got the interest. Instead of coming back to the interest page, when you after making the last period from 1st September to 1st October we completed now. So up to that we calculate interest. So after completing that interest, now here itself you can calculate for the next period. 1st October means next one is 1st November. Directly you can calculate from here. We need not go there and calculate and again open this voucher. In this voucher itself. So go to loan to Ajay. Come here, accept, and 1,050 is the interest automatically added. 20,000 plus 1,000, 21,000 plus 1,050, 22,050. And now it is receivable, interest receivable. So being compound interest, receivable for October, 1st September to 1st October. Now 1st September to 1st October over, then 1st October to 1st November. This is for the whole month of October. So 1st October to 1st November means the whole month of October. So for the month of October. So for the second month also we calculated because he said you will pay after 3 months with monthly compound. So third month will be from 1st September to 1st October, 1st October to 1st November. Now 1st November to 1st December. Again the same thing you take, change the date. 1st November. I mean now 1st December. September to October, October to November, November to December. 1st December is the third month. Again you come here. See here, Mahesh Traders. Sorry. Loan to Ajay. Now you see, accept. See, 1,001 or 250. You see here. First one is 20,000. 20,000 plus 5% interest. If you take 1,000, so 21,000 plus 5%. If you take 1,050, total will be 22,050. Now again 5%. If you take 1,001 or 250, 1,001 or 250 is the interest. Okay, 1,001 or 250 is the interest. Then come down. See, interest receivable 1,001 or 250 being compound interest receivable for the month of November. September over, October over, now next November. So this is completed. Okay, from here itself you can see the same thing here. What is the total amount? Is this one, interest and all this. Here itself you can go and see. You can go to the ledger. The ledger is called as ledger voucher, means ledger account. If you open this, so go to the Ajay. So here, go to take the total period. Here, say on 1st September, we give, this is old one. This is old one. 10,000 plus 600 interest and total is received. But here now again we give 20,000. First month 10,000, second month 1,050, third month 1,001 or 250. Total amount plus interest 23,152.50 is the total amount. Here itself, we will 1st December calculated. So on 1st December, we will receive the interest and total amount. So receiving means we have to make voucher we have to create the voucher. So create voucher. What is the voucher now we have to get on 1st September? We receive the money. So we give the loan payment. Now we are receiving the money. Take receipt 1st December. Here it come. From where you are getting? We are getting from loan to Ajay. From Ajay you are getting. Name of the account is loan to Ajay. See here 23,152.50. 23,152.50 we will receive and debit here. When you are making payment, we paid cash or bank maybe, but now we are getting also receiving also we may get receive cash or we may receive bank. So if you receive bank through bank, so we'll go to debit State Bank of India getting to bank. If it is cash, you can select cash. This I am taking State Bank of India, and in the case of State Bank of India, the check number details will be asked. So here their number, they are giving the check to us, so their number we will enter and their bank account. Okay, their check will be in their bank. So here list is not coming. Space bar, the total list will come. This list we will get only in the case of licensed release, licensed version. If it is licensed mode, if it is education mode, only not applicable under specify bank name. These two will be available. So just to select specify bank, we can give his bank name is, for example, HDFC Bank. Ours is State Bank. Their bank is HDFC Bank. Their check account only. The check will be given by in their bank, from their bank only. So this is, you see, you go back. See here, the bank is automatically taken, given by us. Accept. So now, we could the total amount we are receiving with interest. So being the loan amount receiving back, received with compound interest. So that is the narration. Now you go and see the ledger. Go to ledger vouchers, ledger voucher. So here, loan to Ajay. See, so this is the amount principal, all 3 months interest. Total is this, including this also, and this one is received, and that including total amount will show. So both are same. See, total amount, balance is nil. So like this, we can calculate. So compound interest in the case of loan. So in this case of loan, now we calculated loan given and interest is receivable. But now we will take up another example. We are giving the loan. We are taking the loan. If you take the loan, we have to pay interest. Okay, then we'll take one example for that. So now we will take up one example. So in this case, so for example, starting from the beginning, we will go to create and select ledger and create the party, or go to alter, then we select list will be completed, displayed here. We require another loan. The account is not there because we are taking loan from Ajay. This is Ajay. From Vijay, we are taking loan. So loan, this is given, we are giving loan to Ajay. That we are taking loan from Vijay. So that is not there. We will create. So loan from Vijay. Loan from Vijay. So what is the group? So when you are giving loans and advances, asset. Loans and advances, asset. When you are taking the loan, we will take loans. See here, you will take loans liability. Liability. If you are taking loan, this is only friends or family, friends or relations. Okay, then it is loans. But in the case of banks and other financial institutions, when you take the loan, we may provide security or may not provide security. In the case of secured, if you provide security, they are called as secured loans. If you don't have security, unsecured loans. In the case of banks and other financial institutions, this is simply taken from friends or somebody, from other customers or from other persons known in the business. So we are taking it as loans liability because it is liability only. And here, in this also interest is to be calculated. That compounding only when you are transferring the money. Up to that, everything is same. See here, yes, if you take here, simple configuration, we'll keep it. Don't add the first date. That is when you are giving the loan. So when you are giving the loan, taking the loan or giving the loan, the first date of the transaction, don't add it. And at the end, this is for adding in the beginning. This is for deducting at the end. Don't add in the beginning, don't deduct that time. That one. So in this case, we will take up, for example, 2%. 2% per calendar month. 2% per calendar month. In this case, we are taking the loan. You are taking the loan means his account is a creditor. Like giving loan to us means we have to pay to him. Then his balance will be credited. When you give the loan, his balance will be debit. When you take the loan, he is giving to the loan to us. So his account will show credit balance. You can take credit balances. We can take here. We can take credit balances, or we can take all balances, no problem. If there is credit balance, it will calculate on credit balance only. So take credit balance or all balances only. Okay, take it. Accept this. So this is completed. That ledger is created. Now we will make the voucher. So in this case, so in the last example, see here, the last transaction is the interest is 1st December, the 1st October or something. So 1st October, November, December, October. This also 1st September we will take a loan to Ajay. This is so from 1st December we will take up. First, whatever it may be, what is the date? There is no problem. Even for every loan, everything may be April, May, whatever it may be. So here we will take up 1st December, for example. So 1st December we are taking loan. So go to transactions. So in the previous case we are giving loan, but now we are getting loan means receipt we have to go. On 1st December, receipt, who is giving loan to us? Here, loan from Vijay. Vijay is giving to us. Loan from Vijay. Suppose he is giving 50,000 is giving. 50,000. So his balance is showing 50,000 is a creditor. So credit balance. Okay, is a loan he is giving. Now come, we are getting money. We'll take bank. So 50,000 means we will get through bank only. If it is cash, no problem. We'll take up. So here, he is giving from bank, check number. His check number is this one. And his bank is, so here space bar, so here it will come. Here we have to click space bar, then only these two will come for your educational mode. If it is licensed mode, all that banks will be displayed. These are not Indian banks, Indian branches. Every bank, one country, that is country-wise branches. State Bank of India, India. State Bank of India, USA. State Bank of India, London, like that. Now take specify bank. It may be, for example, ICICI Bank. So we are taking ICICI Bank. Loan, we are taking the loan. So loan receipt taken from Vijay. Loan taken from Vijay. So on interest, on compound interest. So this is accepted. Now we need not go anywhere to see the interest. We need not go to the gate of tally, display more reports, then statement of accounts, interest calculation. All these are not required. Directly you will go to, and you can take here, you can type here, you can type interest, INT if you calculate, right? Interest will become. So there you're getting interest receivable, interest payable, list of all the persons. In the case of single ledger, you want to select, you can go to ledger interest calculation. In this case, you can select ledger will display, you can select any one person. If you go to interest payable, so to every creditor, every person to whom we have to pay the amounts and to whom we enable the interest calculation, all these calculations will be displayed totally. But here we require only one. Loan from Vijay. Loan from Vijay, you take. So here it is showing again 1st April. So if you take the date, so we are taking 1st December. 1st December to 1st January. 1 month means every month it is monthly compounding. If it is quarter, 1st December to 1st March. December, January, February, March. So now we are taking every month. 1st January. See here, the same thing. 2%, 50,000. Previously 20,000, 5%. It will be 1,000. Here 50,000, 2%. So 2nd December, even if you take from 1st April to 1st January, if you take, so even if you are giving 1st April, the loan is given on, the transaction took place on 1st December only. So from December only, the interest will be calculated. From April, it will not calculate even if you give. So generally, we will give the total date. Otherwise, date of the transaction you can give 1st December to 1st January. Date of the transaction, date of the month end. So here, whatever 1,000. Now this will be transferred. So for this, we have to transfer through voucher. Journal means the compounding entry. I mean compounding option is not available. Compounding option is not available. But here, so you can do in another way. In the next problem, I will tell you. Then another way, going to take the go to means Alt G, alter master. Which master we require now? See here, previously we gave loan, interest we had to receive. But here, we are we took the loan, we have to pay the interest. Interest is payable. His account is a credit balance. We have to pay to him. So now also this interest is also credited to his account. So we have to take the note, we have to take the voucher, credit note voucher. So here, go to voucher types, take the credit note. Interest receivable in the case of giving loan giving to us by us, given by us, then debit note we use. Now we have taken the loan, we have to pay the interest. So credit note we will take up. And here, see, for the credit note, I have already created. So credit note, come to see, you need not come by clicking this enter button. From here, directly, we can click the mouse here. The mouse will come here. Then you can create interest payable. You can create that interest payable class. Again, it lasts. This class is used for accounting, interest accounting, yes. And then here also, amount to be treated as compounding interest. If it is simple interest, just you have to take no. If it is compound, now we require compound interest. That's why we are taking yes. In the previous case, simple interest you are calculating, that you have to make no. In the compound interest, no. Now we require compound interest, accepted. Now, okay. Now similarly, directly from here, we can go to the create voucher. Now we have to make the voucher, isn't it? Make the voucher. What is the date? 1st December we have given. 1st January is the date. 1st January. And what is the voucher? Credit note Alt F7. Sir, Alt F6. Alt F5 is the debit note. And credit note is Alt F7. So click Alt F6. Sorry. Alt F6. It is credit note. So not applicable, we select, credit note. If we select not applicable, it will be ordinary general credit note. Normal credit note means sales returns and some other purpose. But here it is for interest payable. So select interest payable. So interest payable class is there. So it will add the, it means it will debit note, interest payable class means it will take the interest, it will show automatically, and that will be added to the principal. So come here for January, loan from Vijay. Here, accept. See, 1,000 rupees credit, isn't it? Previously debit, now it is credit, interest receivable. Interest payable. So credit, party account is credit. Interest account is payable means expense. So now we will take up interest we have to pay. So created interest payable class. Now we have to create interest payable. Ledger we have to create now. Expense, interest payable. Actually payable means a liability, but you take it as expense. Expense because we pay after calculating, we pay immediately. We not go to the next year. That is why here indirect expense, because interest payable we have to pay means expense. No interest is calculated on that. Accept. See here automatically interest payable 1,000 rupees. But here interest payable, that are simply compound interest payable for December. Because December 1st to January 1st means up to December 31st. Okay. December 1st to January 1st means the whole month of December. That's why compound interest payable for the month of December. So we need not go anywhere. Again, immediately give 1st February. Give 1st February and up to 1st February. Again, loan from Vijay. Accept. Again, 1,020. See here, 50,000. 50,000 into 2% they are taken. So 1,000 plus 50,000. The principal for the second month will be 51,000 into again 2%. The interest will be 1,020. So that is the interest 1,020. Okay, 1,020. So this is the amount. And now, and then it is interest payable created already now. Created interest payable 1,020. Interest payable already in the first month we did. Compound interest payable for January, December to January 1st. January 1st to February 1st means this is January month. For the month of January, this is completed. Again, third, okay, so after 3 months, we promised to pay. In the previous example, after 3 months, he promised to pay to us. Now we promise to pay after 3 months. That's why for the 3 months with compound interest we are paying. Now, 1st March. So now December to January 1st, first month, February 1st, second month, third month, March 1st, third month. Again, say the interest loan from Vijay. Accept. So 1,040. So how it is calculated? 550,000 plus 1,000 plus 1,020. So 2,020. 52,020 on this 2%. The amount will be, see, 1040 rupees 40 paisa. 1040 rupees 40 paisa is the interest for the third month. So now accept. Again, interest is payable. We have to pay interest payable 1040. Compound interest payable for the month of February. So completed. So complete. Now we'll go to the ledger. We have to make the payment. Go to ledger voucher. Go to loan from Ajay. Go and see here. See here. So we have given, we have taken the loan 50,000, the credit balance 1,000 rupees first month, second month 1,020, next 1,040, 40 paise. Total amount will be 53,060 rupees 40 paisa. So if you go to this, we have to make the payment, we have to pay now. So take the create voucher. In this create voucher, so what is the voucher you have to take? We have taken loan from Vijay. We have to pay back with interest. So we have to make payment. So go to the payment on 1st March. So 1st March, to whom we are paying? Paying to Vijay. So Vijay. So what is the amount payable? Credit balance is showing credit balance. Now we are debiting. Balance will be closed. 53,000, 50, 60, 60 rupees 40 paisa. 53,060 rupees 40 paisa. So the balance is nil. Now we are getting. So we are paying now. There we received through bank. Whatever it may be, cash may be. Now we are paying by check or cash. If you get cash, you will select cash and you will take this. So here we are making the payment. So our check number we will enter. Our check number we will enter 1, 2, 3, 4, 5, 6. And here we are making payment from our bank. So this is from our bank. Here bank name is not given. When are receiving, their bank name we have to write. When are giving, we need not write our bank is there. So here we have to give the number and the date and loan from Mohan, loan from Vijay, repaid with compound interest. Or loan paid with compound interest. Name is not required. Loan paid with compound interest. That's all. Like this, we will calculate the interest payable and receivable. That is, in the case of loan, how you will calculate interest? Compound interest. So loan given to us others, how you will calculate compound interest? When you take loan from others, how you will calculate interest? When you give the loan, the interest is receivable, total amount is receivable. When you take the loan from others, we have to pay the interest. Interest is payable and the total amount is payable with interest. This is about the loans. I mean, in the previous simple interest, you have taken only loan given, but you loan to somebody. But here, in this case, loan to somebody, loan from somebody, we have collected. So with this, I am closing this. In the next video, we will take up the debtors and creditors for sale of goods, sale or purchase of goods. Okay. Then we will get that. Till then, I close this and wish you all the best. Bye. We'll meet in the next video.